Hello, this is Alex from ONG Tax and Accounting Services. So in this video, we're going to do a quick introduction of CP2000 and CP3219A. We're going to talk about what causes the IRS to send you these notices. And then we also talk about what you as a taxpayer needs to do, or how you as a taxpayer need to respond to some of these notices to avoid issues down the road. Now, to start off, let me throw a word of caution out there that this video is for educational purposes only. It is not meant to be a legal or tax advice. And if at any point in time you have a legal or tax issue, you should always consult with a competent CPA, tax attorney, or an enrolled agent who's going to be able to listen to your story and help you out. Alright, so we're going to look at a brief introduction of what CP2000 is and what causes it. Now, a CP2000 is generated from the IRS Automated Underreporter System. It is sometimes called the AUR program. The notice compares income, credit, and deduction information that the IRS has received from third parties. So it could be employers, banks, or brokerage firms. So the IRS receives all this information from these third parties, and then it then compares it against the income, the credit, and the deduction that you as a taxpayer reported on your tax return. So in other words, the IRS, when they send you the CP2000, they're essentially asking you to verify the income, the credit, and the deduction that you reported on the tax return, because they think that what you reported is different from the information that the IRS has received from other sources, which is the third parties we talked about, such as the bank, the employers, and the brokerage firms. Now, a CP2000 notice also alerts you, the taxpayer, that there is some differences or discrepancies which was identified, and that additional taxes may be owed as a result of you underreporting your income. The notice generally provides explanation of who reported the income and how the IRS calculated the income increase and the tax increase. So if you take a deep look at your notice, you realize that the IRS, somewhere in the notice, it's providing you information on where they got all these other income items from and how they calculated the taxes that they are currently proposing on your notice. It is important to note that the CP2000 is not a bill. It is just a proposal to adjust your income, the payment, the credit, and the deductions that you claim on your tax return. Let's look at the common types of errors and omission that trigger CP2000. Number one on my list is when taxpayers underreport security sales, wages, taxable pensions, unemployment compensation, and non-employee compensation, and so much more. The list here is not all inclusive. There are so many other types of income that taxpayers commit errors and omissions on. The second one is when taxpayers net income and do not provide a breakdown of deduction. So an example may be helpful. Let's say you receive a 1099K of $10,000, which is reported as a gross sales you made. However, when you look into your bank account, you only received $9,000 of that income that's reported on the 1099K. So you ask yourself, where did the $1,000 go? Where did the $1,000 go? Now, the $1,000 may be other expenses or other transaction fees that the platform or the payer had already deducted from your payment. And so you already, instead of getting $10,000, you probably received $9,000. And so you think that you should only be reporting the $9,000 you received, which is incorrect. Whenever you get a 1099K, the IRS looks at the gross amount. So in this case, you're going to report a $10,000. And then you're also going to tell the IRS on a separate line, maybe it's a deduction. So if it's a transaction fees, you're going to state that you had a transaction fees of $1,000. So when you finish your calculation, you're going to see that your gross sales of $10,000 minus your transaction fees of $1,000 is going to give you your $9,000, which you receive in your bank account, which is pretty easy, and it makes it Very easy for the IRS to understand what is going on. Do not net the income. Always report what is actually showing on the 1099K and then provide a breakdown of deductions so that everything makes sense. The third on my list is when taxpayers fail to report income on the correct line. So for example, wages should be reported on line 1 of 1040. If you're using the 2021 version, you look on line page 1, 1040, you would see that line, it talks about wages and salaries. So if you are not reporting income on the correct line, it may trigger CP2000 notice. One other problem that I also see is when taxpayers group amount or list multiple payers on one line when they are reporting income types of deduction. Do not group interest and dividend amount by the same payer. Now let's give you an example. Let's say you get a 1099 INT, which is interest income of $100 from Fidelity. And then also let's say that you also receive a 1099 DIV, which is dividend income of $100 from the same brokerage firm, which is Fidelity. What this is telling you is do not add the interest and the dividend together and put them on one line. So in this case, it's telling you do not add the interest income of $100 and the dividend income of $100 and put in one line $200. Don't do that. There is a line for interest income on your tax forms, and then there's also a separate line for dividend income on your tax forms. It does not matter if the income came from the same source. You need to report it on the correct lines, so do not group them. Make sure you're reporting them accurately. One major issue is also the failure to amend your return when you get a corrected 1099 or W-2. Now, any type of information return that you receive to prepare your tax return can be amended if the payer realizes that there is some mistake or some errors that needs to be corrected. Now, when you get that amended information return, such as an amended 1099 or W-2, you should always take a second look at the return that you already prepared and make sure everything looks alright. So when you get a corrected 1099 or W-2, take a second look at your original return you filed and see if amended return is necessary. Now, another issue is failure to include Form 8606 to show the IRS how you were able to determine the taxable portion of your IRA distribution. Sometimes people file, they take out IRA distribution and they actually don't report the distributions correctly. Some of the IRAs you get, if it's a Roth or if it's a traditional IRA in which you have basis in it, the distribution may not be taxable, but depending on how it was reported to you, you have to include Form 8606 to let the IRS knows that, okay, you did receive an IRA, some of it are non-deductible, some of it are non-taxable. On the same form, you would show the IRS how the taxable portion of your IRA distribution was calculated. And it's very important that you follow those instructions in reporting those kind of items correctly. Now, the final one here is if the income, the payment, and the credit and the deductions reported by the third-party payers cannot be identified on the tax return. Now, when we say cannot be identified, it means that you've got this information forms, such as a W-2 or 1099 INT or 1099 DIV, but you did not report it on the tax return, or you probably reported it on the wrong line, and so it cannot be identified on the tax return. So what should you do when you receive CP2000? In response to receiving a CP2000, you as a taxpayer may provide supporting documentation that fully resolve the discrepancy identified by the AUR program. So when the IRS sends you these notices, they give you a whole bunch of instructions on what to do. If you agree, there is a process you need to follow. If you disagree, there's also a process you need to follow. Sometimes they are requesting for some simple documentations that you just need to provide, and it's just as simple as that. Now, you are required to respond to the CP2000 notices 30 days of the date of the notice, or 60 days if you live outside the United States. If you provided you want a quick resolution, you should take notice of these dates. 30 days if your principal residence is in the US, 60 days if you live outside the US. If you, the taxpayer, do not respond to the letter proposing the tax change, they take you through the next step, which is you get a certified letter or a statutory notice of deficiency. It is usually called a 90-day letter. So the IRS is going to issue you a 90-day letter to let you know what's going on. If you are a taxpayer that resides abroad or overseas, you, instead of 90 days, you are afforded 150 days to respond to that notice of deficiency letter. Now let's look at what happens if you ignore CP2000 or did not resolve the issue correctly. It is very important to stress on the fact that when the IRS sent you a CP2000, their agency, which is the IRS, is allowing you, the taxpayer, an opportunity to internally appeal the proposed deficiency. If you are unable to provide any support for the discrepancy within that 30 days timeline, the IRS will issue you a notice of deficiency as we previously stated. If there is no response to that notice of deficiency, the IRS will assess the proposed tax liability by default and the collection activity will begin. Notice of deficiency is a proposal. That's 90-day letter or the 150-day letter if you live overseas is a proposal to assess additional taxes and penalties. And it also allows you, the taxpayer, to protest the matter in U.S. tax court. Now, we've talked a lot about the CP2000. Let's move on. Let's progress to CP3219A, which is the notice of deficiency as you see on the screen. And we've talked about notice of deficiency briefly in the previous slides. So let's introduce you to CP3219A. The CP3219A is a statutory notice of deficiency. Okay, it is issued when you, the taxpayer, number one, do not respond to the CP2000, or your response is either insufficient or your response resulted in an assessment which is different from the CP2000 notice that was provided to you. If the IRS did not hear from you or you could not resolve the issue with the information you provided, the IRS will send you a CP3219A. So essentially the CP3219A is the notice of deficiency. It is also that 90-day letter if you live in the US or the 150-day letter if you live outside of the US. The notice of deficiency is a ticket to the tax court. Without this notice of deficiency, you have no basis or leg to stand on to go to the tax court. You cannot go to the tax court unless you've received this notice of deficiency. So it's very important that you know that you cannot just simply get a CP2000 and get upset and go to tax court. They're not going to listen to you. So you always have to make sure, if you're petitioning the tax court, you need to make sure you have this notice of deficiency to do that. So we've already stated that without a notice, you would not be able to file in tax court. Now let's move on to the final one here. If you do not file the petition in tax court within the specified time, usually 90 days if you live in the US or 150 days if you reside outside of the US, the amount of the deficiency or the taxes owed becomes finalized. Alright, so it is not every time that the taxpayer usually disagrees with the IRS. Sometimes they know they messed up and they agree and they want to pay, or they want some kind of concession to make sure that the problem goes away. So we're going to tell you what to do if you agree with the notice of deficiency and what you need to do. Number one is you can pay the tax amount showed on the notice. You're absolutely good to do that, to pay the tax amount shown on the notice. If you decide to pay the tax amount shown on the notice, or if you agree with the notice, you must return the signed waiver if you agree to the tax and mail it to the same address shown on the upper left hand side of your notice. So in an example here on your screen, you would see that on the upper left hand side, it shows a California address. Yours may not show the same address. So always look at what is showing on your notice to figure out where to send your waiver and your agreement forms to. When you pay online, some people chooses to pay some of these taxes online instead of mailing a check. If you decide to pay online, there will be an option for CP2000, CP2501 or CP3219A option, and then you simply select the tax year. So for example, if you were issued a CP2000 or CP3219A for tax year 2021, you go online, you check the options, and then you select tax year 2021, and then you make your payment, and that's it. If you agree, you're not required to pay all of the amount. You can pay some or all of the tax liability that's on the notice. You can enclose a check or money order, and then you make it payable to the U.S. Department of Treasury. And then you also have to enclose Form 5564 to the address shown on the upper left-hand side of your notice. It's very important. Whenever you get a notice, there's always an address on there that tells you where to mail your correspondence to. If you did not pay everything on the spot, if you did not send a check to pay everything, or you went online but did not pay everything, the IRS will later send you a bill for the amount due, including any interest and applicable penalties. If you filed your return, your tax return married filing jointly, make sure that both spouses sign the Form 5564. Now let's look at the difficult part here. It is not all the time that the IRS is correct. Sometimes the notices you receive may not be accurate and you may have to disagree. Okay, so when you receive the CP3219A notice and you want to disagree, here are the steps that you need to follow. So you may still be able to resolve the issue with the IRS out of court. Now, the CP3219A tells you what you need to do. It tells you how many days you have to petition the tax court. And it also tells you that you can still resolve the issue with the IRS out of court. What I would say is that if you have received a CP3219A, at this stage, it is late. And so your issue may not be that simple, and representation is highly advised. So you could hire an attorney or CP or an enrolled agent to look into the issues for you. If you choose to go to the tax court, which I think most likely you would probably have to do that, and you would have to hire a tax attorney or a USTCP to represent you. CPAs are not licensed to practice in the tax court. You have two sets of professionals that can practice before the tax court, which is a tax attorney or a U.S. tax court practitioner. Now, USTCP can be a CP or an EA who has taken the special exams to be licensed or to be approved to practice before the tax court. But if you want representation at the tax court, you need a tax attorney or USTCP to represent you. If hiring a tax attorney or a USTCP seems to be a very expensive process, you also have the legal right to represent yourself if you do not want to incur additional legal fees. And then I must also say that if you petition for the tax court, you preserve your right to have a hearing, but there is no additional obligation on your side to hire an attorney, but you have to know what you're doing. So whether you hire an attorney or do it yourself, by filing in the tax court, you're preserving your right to have a hearing. You're preserving your right to have a judicial review and see whether your side is correct or whether the IRS is correct. Finally, I highly recommend that you do 1 and 2, which means that you can concurrently choose to file the petition with the tax court and then try and work the issue out with the IRS. So whatever comes out good, you just take it. Most people would choose not to deal with the tax court and they will try and resolve the issue with the IRS. If you try to do that, you need to seek an advice, because you don't want to be wasting your time at the IRS side and then losing the judicial review or the protection that the courts provide. So if you want to do that, make sure you're seeking the help of a competent professional that can advise you on whether the path you want to take is accurate. Now let's look at a brief introduction to the tax court petition. A petition is considered timely filed if the tax court receives it within 90 days from the date the CP3219A was mailed to you. So 90 days if you're in the US, 150 days if your place of residence is outside of the US. So take note of that, 90 days and 150 days. what forms would you need? You can get a petition form and rules by downloading them from the ustaxcourt.gov website. You could also contact the office of the clerk of the U.S. Tax Court to get the forms. But generally, if you just do it online, you should be able to get the tax forms accurately. Now, again, we're going to stress that this part of the presentation is for educational purposes only. It's not a legal advice or anything. It's just to educate you on what forms you would need. So if you choose to petition the tax court, there are 3 forms that you need. You need TC Form 2. Form 2 is used to file the petition. That's what you're going to state on there for your petition. Form 4 is the Statement of Taxpayer Identification Number. Now, you need this form for privacy purposes because the tax court petition is a public document. Whenever you petition the tax court, your information becomes public, and so the tax court have developed a process where even though your name will show in the docket, your Social Security and ITIN or tax ID will not show if you complete these forms. So you're going to state this separately on a separate form showing your tax ID. TC Form 5 is also to request for a place of trial. For example, if you live in New York, you have to state that you live in New York and you want your place of trial to be in New York, or you have to also specify the specific city where you want the trial to take place. So now, once you've been able to finish all of that, there is a filing fee of $60. As at the time I'm recording this video on October 10, 2022, the filing fee for petitioning the tax court is $60. You can also include all tax years you're contesting on one petition form. So if you're dealing with notice of deficiency for multiple tax years, you can add all of them together and petition on one form. I must also say that if you are petitioning the tax court, do not send your petition to the IRS. The IRS is basically the other party that you're in litigation with. You don't have to send them the petition. If you send everything to the tax court will let the IRS know that you are really serious and you want to litigate this issue. Send the petition to the U.S. Tax Court in Washington, D.C. using the address below. Once everything is sent in and you've done it correctly, the tax court clerk is going to send you confirmation of the petition that you've started. Now, as I stated earlier on, even when you choose to petition the tax court, the IRS on the notice of deficiency makes it clear that you can be able to resolve the dispute with the IRS. I'm going to show you how you do that. So prior to the expiration of the 90 days or the 150 days provided to you to petition the tax court, you may also choose to resolve the matter with the IRS without going to the tax court. So there are many ways you can look at this. One is, if you're scared of the tax court, then you can actually try and resolve the issue directly with the IRS. Second option is you can concurrently file the petition to protect your right and then also move on to resolve the issue with the IRS. So concurrently, you're doing that. The third option is others would wait to resolve the issue with the IRS, having the 90 day and 150 days in mind. If it's getting a little bit towards, the deadline, they then petition the tax court. So let's say you started working with the IRS. It's been 80 days. You've never heard from the IRS. Then it kind of makes sense to maybe file the petition right away, because if the IRS has not resolved the issue in 80 days, it is not really likely that the 10 days left will be sufficient for the IRS to resolve it. So then it makes sense to petition the tax court in that manner. If you do not agree with the proposed changes and want the IRS to consider additional information, like I said, you can mail or fax additional information for them to figure it out. However, the IRS consideration of any additional information you're providing is not going to extend the deadline to file a petition with the U.S. Tax Court. The IRS makes this very clear in the notices they send you. Even when you send your correspondence, the IRS sends you a confirmation that they've received your correspondence and they are working on. Again, in the IRS confirmation of your protest, it will also state on that letter, as you see on the screen, that the IRS consideration of your information is not going to extend the deadline to file a petition with the U.S. tax court. And that's why I always say that spending $60 to petition the U.S. tax court will be a game changer for you if you fall into any of these difficult situations. Whether the issue is a simple one and can be resolved quickly or not, the clock starts ticking for judicial review. It's very important that you make a decision whether you want to petition the tax court or not. Frankly, if I have to advise anyone, it's much better to resolve the issue with the tax court at the same time resolving the issue with the IRS. Now, even when you're dealing directly with the IRS, as I keep saying, it is generally advisable to file a petition and protect your rights. In most cases, what I have seen is that the tax court will review the information you've provided, and then they may send the petition back to the appeals or even to the IRS to resolve the issue. So once again, the tax court petition is very important. It is also important because if a late answer to the CP3219 does not clear the issue up, you will still have time for judicial review. And then finally, the tax court petition will safeguard your right because a favorable outcome may not be guaranteed when working with the IRS. You do not want to put all your eggs in one basket. At least you need to hedge this strategy. Try and petition the tax court whilst working with the IRS, and then everything should be able to fall in place for you. Alright, so I hope this helps you guys out and helps clears up some confusion. And if you have any questions, please use the link below to book some time with me to talk about your CP2000 or CP3219A. Let's figure out if we can get a strategy to get you out of some of these issues. Thanks for listening. If you like this video, please click share, like, subscribe. I'll talk to you on some other video. Bye.